We operate the OTCQX, OTCQB, and OTC Pink financial marketplaces for 10,000 U.S. and global securities. Our trading system is an SEC-registered ATS, and we help create better informed and more efficient financial marketplaces. I used to be a trader, and the trading process for securities that were not listed on stock exchanges was very inefficient. It was opaque. There wasn't much technology. So what we did was we bought the previous publisher of a phone book who listed many of the securities not on exchanges, and we took it electronic. And as we took it electronic, the changes in technology kicked off changes in transparency, changes in regulation. So today, the trading experience for an investor when they go through either an online broker or a traditional broker or an institutional trading platform is very close to the trading experience to a NASDAQ or New York Stock Exchange security. There's two different parts of the information flow. There's one part is the trading experience, and there we work with the broker-dealer community. We have the same electronic broker-dealers as are the largest traders of NASDAQ or New York Stock Exchange securities. And those firms have incredible technology platforms. They're able to provide very efficient executions and liquidity into the market when needed across a broad portfolio of securities. So that part of the marketplace we've really transformed. The second part of our marketplace is a little bit more complicated, which is working on the company information experience. There, we have to work with the companies that are traded on our platform. And we've got a wide range of companies. So what we do is we've segmented our marketplaces into three distinct marketplaces. At the top, we have OTCQX. It's our best marketplace with qualified companies, financial standards, sponsorship by professional third parties. And there, we're trying to offer investors quality companies with quality management teams, quality information, and a quality trading experience. Then below that, we've got a venture stage marketplace, OTCQB. There, companies need to be U.S. reporting. However, there are no financial standards. There's not management background checks. So while companies are SEC reporting on that marketplace, it's a wide range of companies. And we also have many community banks on that marketplace. Finally, we have our open marketplace, OTC Pink. And that, as with any open and inclusive platform, has a range of companies from ADRs of large foreign companies that aren't comfortable distributing their information into the U.S., to financially distressed companies, to some companies that don't provide great information to investors, and there we label them as such. The debate over being public or private is now changing, because it used to be the only way to be public was to list on NASDAQ or New York Stock Exchange. Today, there's lots of different paths to start acting more public as a company. And being public is not just about raising capital. It's not about the IPO. It's about building a sustainable and successful company for the long term. And public companies get a lot of benefits. They get visibility of their business model, not only with investors, but with their stakeholders and strategic partners. They also get liquidity for their existing investors. One of the easiest ways to make a security more valuable is to make it transferable. And they get valuation. You know, being publicly traded, companies can get the highest valuation for their shares other than selling the whole company. And they also get to build trust in the marketplace. And because transparency builds trust, as companies are providing information out to the market using the structure of being public of annual and quarterly reports, whether they're SEC reporting or they're not SEC reporting and they just publish their audited financials on their website, that starts to build, that builds a track record. And that over time lowers cost of capital. There is a lot of cost and complexity of being on NASDAQ or New York Stock Exchange. And what we've tried to focus on is how can we deliver most of the features and functionality with less of the complexity and cost. And there's a real opportunity because the exchange process has gotten very complex to fit the needs of the largest companies, complex multinationals that are owned by index funds, but they've gone away from the needs of smaller companies who are owned by stock pickers. And there, we've tried to create a stripped-down disclosure regime, or using SEC reporting, but not having the complexity of the exchange-type corporate governance, but still building the trust out to investors with a third-party sponsor for OTCQX. So cost and complexity are a concern. Now the flip side is some companies are nervous of being transparent, having regular reporting, putting disclosure out there. And that, while it may make companies slightly nervous of being transparent, long term, they build stronger companies because transparency gets feedback. Transparency makes it so companies have to deal with issues at the time they come up. Transparency, it doesn't let companies hide things. It doesn't let the companies put things off. So it is easier to be in the dark, but you don't get better.